I probably heard about it in the 2012, 2013 timeframe. I famously tweeted about it. I thought it was like I thought maybe the regulators would shut it down. I didn't have a strong conviction on it. And then I kind of saw it flicker in the side of my eye for the next 7 or 8 years. But I was much more interested either in enterprise software, because it's my core business, or I was interested in what was going on with Amazon and Apple and Facebook, because I was a big investor in those, and I'd written the mobile wave, and I wasn't really thinking about the monetary network. I had very clear ideas about the dominance of Google as an information network, Facebook as a social network, Apple as a mobile network, and Amazon as a retail network. That was very clear to me. The monetary network, not so clear to me. That I didn't really become super interested in Bitcoin until March of 2020.
Wow.
I would say that 2020 is the year we went into the virtual wave. The mobile wave kicked off around 2010, and 10 years later, now we're going the virtual wave. And the virtual wave is epitomized by two massive changes. One, on the operational P&L side, is the explosion of Zoom and remote marketing, remote work, remote meetings, the explosion of YouTube as a way to get your message out, and the virtualization of sales, marketing, services, and communication. And, we saw Zoom go from 10 million users to 400 million users or something. You get to say a decade of progress, in a few weeks. In 12 weeks, you had 12 years of advance. And I think on the balance sheet side and on the money side, you saw the virtualization of gold. You saw the virtualization of money. And the biggest manifestation of that is Bitcoin, and this idea that maybe it's time for a virtual digital monetary network. And so I think the catalyst was the pandemic and the lockdowns and the monetary response to the pandemic.
Sure.
Right, because we just had an explosion in the monetary supply, the M2 money supply, and we had a K-shaped recovery, and that K-shaped recovery with a massively quick response and recovery in financial assets, but a very, very slow recovery of Main Street operations, caused a lot of people to stop and reconsider what they understood about money. If it was up to me, and it was just up to me, then we would have just went and bought $500 million worth of Bitcoin as fast as we could.
Sure.
But, when you're a public company officer, you're a fiduciary, and you have to consider how you communicate this in a responsible fashion to all the outside shareholders and all the other constituents that are involved. So we went through pretty extensive deliberations, and I explained to the board my thoughts. And obviously I told them that I had acquired Bitcoin myself, so they need to understand my situation. Then after that, we considered as a team the regulatory issues, the financial issues, the risk issues, the other macroeconomic options. And that was 8 weeks, a pretty decent amount of deliberation, a lot of one-on-one meetings, a lot of group meetings, a lot of research, work that the accountants did, work that the lawyers did, work that the officers did, work that the board did. And after we went through all that work, we actually arrived at a measured strategy. And the strategy was, multi-pronged. First, we announced to the entire marketplace that we're going to pursue a strategy of a combination of stock buybacks and asset investments in order to protect the balance sheet. So we made that known because we wanted everybody that was an existing shareholder to know that we had concerns about inflation, and we felt that we needed to do something. And the two obvious answers are either you invest all the treasury, we had $500 million, you either invest it in the stock, you buy all the stock back,
right,
or you invest it in an inflation hedge. And so there's no magic, there's no perfect answer. So we just concluded, well, we'll just do some of both. We split it down the middle. We said $250 million earmarked for stock buyback, $250 million earmarked for the inflation investment. After the market digested that, we moved forward with the strategy and we said, okay, well, we thought about it and we looked at every single asset. What we wanted was a safe haven treasury reserve asset that was going to appreciate faster than the rate of monetary expansion. So we looked at real estate, we looked at bonds, we looked at stocks. That none of those things work because they're all fiat instruments and they're valued based on the cash flows. And if the money supply expands and debases, the cash flows are going to debase as well. So then we went to precious metals, gold and silver, and the truth is that was the best idea 100 years ago, but there's a better idea, which is digital gold. And digital gold is everything that you love about gold and everything you don't, and nothing that you hate about gold. So it's like it's pure pharmaceutical grade gold. And then we looked at every other crypto and figured out what's the dominant network that's most likely to get the lion's share of support from other investors with similar interest to us. And the conclusion was Bitcoin because of a commitment to proof of work. And if you decide what you want is a proof of work crypto network, well, then Bitcoin is the largest. And the issue is you got to pass over Ethereum because Ethereum's transitioning from proof of work to proof of stake. And if you're going to actually put $1 billion on the network, you have to have 3 to 5 years of experience of a stable network. And so I asked me 5 years after Ethereum 2.0 comes out how I feel about it, and I'll have an opinion. But right now, I can't, as a fiduciary, bet on something that's about to go through a massive architectural change. So then you go to the next thing, which is Bitcoin Cash and Satoshi Vision, and they're all like 50, 60, 70 times smaller. Right. So really there wasn't another crypto that was looking like a store of value, proof of work, network that would be a treasury reserve. And that's why Bitcoin was the straightforward. And the next closest thing is gold. And gold just isn't that close a thing, right? So we went ahead and we allocated all $250 million to Bitcoin. And then we announced a tender offer to buy back $250 million worth of the stock at a premium. It was a Dutch auction. So the investors, if they didn't really approve of the Bitcoin strategy because it's new and maybe people just don't, right? We wanted to give them a respectful way to exit at a profit. So we tendered at a profit and then we waited through the tender period. And at the end of the period, we had about $60 million tendered. So it could have been as much as 250, but it wasn't that much. Most of the shareholders liked the idea. Right. I mean, they stuck with us, and the stock traded above the tender offer price within a couple of days once people digested it. And so then we bought back the 60 million worth of stock, and we had 175 million extra. And we modified our treasury policy. We announced to the world that now we weren't going to be limited to 250 million. Once they digested that, we bought some more Bitcoin, and then we put that on the wire. So then we had 425 million worth of Bitcoin. And, the stock traded up and Bitcoin traded up. And eventually we had $1 billion worth of Bitcoin. And then we went to the market and we raised 650 million in debt. And we bought more Bitcoin. And, the stock traded up and Bitcoin traded up again. And so now we have a lot of Bitcoin. And, and the bondholders have their bond and the stockholders, have their stock, and everybody that didn't like the idea isn't a stockholder anymore. And the people that like the idea are. So we kind of rotated the shareholder base. And as you can see, it's a long-winded answer to your question because you can't just do it in one move. You have to methodically move through a set of steps in order to make sure that there are no surprises along the way, because everyone deserves to be communicated to.